Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello and welcome to another episode of On My Way to Wealth. My name is Luis and I'm your host. Today I want to talk to you about the 6 top money moves to make if you get laid off. If you recently got laid off or know somebody that has recently gotten laid off, sorry to hear that. But just know that, just like everything, this too shall pass. I watched the Batman movie and it said, after the darkest night comes dawn. Some people say this too shall pass. Some people say that. Some people say everything happens for a reason, so it depends on how you take a look at it. Obviously, if you stay positive, you're going to have a better outcome. But I wanted to talk to you about some money moves to consider for your own journey, right? So after the winter must come spring, right? So stay positive out there. But let's talk about some money moves. We recently heard about some massive layoffs, especially in the tech sector. Amazon laying off people, Meta last year did 11,000 layoffs, Salesforce did 7,000 layoffs, Microsoft 10,000, Google just recently announced that they were laying off 12,000 people. So it's a pretty sad state of affairs for a lot of people, especially in the tech industry right now. If you happen to be one of those or know somebody that does, I'd like to share this information with you because there are some things that you should be considering. Some are immediate because they do have some sort of timeline on them as to what you need to be doing before you even start hitting the pavement out there and getting another job, which I'm sure is going to be top of your list. But there are some moves that you need to make. So let's get right into it. Number one is understand your severance package. Make sure that you understand it, review it, know what you have, because you want to be able to understand exactly what you're getting, because that's going to then help you make some money moves, right? So things like, how many weeks of pay am I getting as part of my severance package? Am I getting a couple of months, couple of weeks, and so on? Just remember that your severance package is going to be taxed, just like your regular pay is going to be included in your W-2. So the amount that you will be receiving is not going to be the same as what you're going to be receiving net, right? Because if they tell you you're going to get 3 months of pay, you got to take into account the fact that you will be taxed at the federal and state level if you live in a state that has income tax. So keep that in mind. So whatever you are receiving gross is not going to be the same as net because of taxation. So that's number one. Also, are you getting back any sick pay that you're due? Are you getting back your vacation pay that you didn't take? Is there any opportunities there for some accelerated benefits with your vesting on your stock options? Are you getting any type of deal on your health insurance? It's another thing that you want to take a look at just so that you can plan ahead. So I'm going to talk about that a little later. Another thing too is file for unemployment, right? It sounds, common sense, but in reality, you might feel like a lot's going on, right? You got to figure out, hey, what are my next moves here now that I don't have this income? Want to make sure you file for unemployment, and that's done at the state level. So immediately after you understand your severance package, move number 2 is go ahead and file for that unemployment if you think it might take a while for you to get a job, especially in the tech sector right now, right? Some of the major companies are laying off. It might be a little harder for you to land something soon if you stay within the same industry or the same type of field, right? So make sure you go ahead and file for that unemployment to at least have some sort of revenue coming in addition to whatever severance you might have gotten, right? So that's going to be great. Number 3 is you need to figure out then, after you've examined your severance package and you know exactly where you stand with your health insurance, is then determine going forward, what are you going to do for health insurance coverage? There are several options. So one of them is called COBRA, which you may be familiar with. And that gives you the ability to continue the same group benefits that you had through your employer. And the cost could be up to 102% of whatever that premium was, right? But that gives you the opportunity to go ahead and continue the same benefits. But now you're going to be paying out of pocket because you're no longer having that deduction coming out of your paycheck. So that's something that you need to immediately figure out. Am I going to go with COBRA? Another option you can consider is If you're in a relationship, you have either a spouse or domestic partner, take a look at their benefits. You may qualify for a special enrollment because you have been recently laid off. You may be able to get into your significant other's plan and maybe compare that to see what the premium will be versus the COBRA benefits, and then make a decision from there. Does it make sense to do COBRA, or does it make sense to hop on my spouse's benefits? And another option could be, what if you just go on the marketplace? Being laid off also qualifies you for a special enrollment, and you can just get your own policy as well in the marketplace. So that's another option for you to consider. It's not just for self-employed people. If you're not eligible anymore, or it doesn't make sense for you to continue with the group benefits from your prior employer, it might just make sense to get a plan through the marketplace. So make sure that you check that out as well, healthcare.gov. And I'll put a link in there in the show notes as well. Move number 4 is review your expenses. I just did the first episode of 2023, specifically talking about budgeting. So be sure to take a look at that if you want to go a little deeper into it, because I share some tips as to how to best budget yourself, especially if you're running a household, right? Just some tips that might help you to set yourself up for success in 2023. But the things that you should be looking out for specifically in your expenses is what is necessary versus what is discretionary, right? So what's necessary, it's like your mortgage, your rent, all the fixed expenses that are required to run your household, right? Grocery shopping and so on. Discretionary, there might be obviously things like going out to eat, maybe some subscriptions that you currently have. You may have to make some sort of sacrifice temporarily, just to make sure that you have enough money to run your household in that phase when you're in between jobs until you figure out exactly what you're going to do, right? One of the things I say in that episode is that the word budget sounds very restrictive to people, which obviously I understand is kind of like the word diet, but it might be something that you may need to take a harder look at, because if you don't have that income, right, you want to make sure that the dollars that are going out are not necessarily going out for things that are discretionary. You might just have to put a pause, delay, or maybe just change the interval or certain things that you do with your discretionary income. Move number 5 is examine your resources. I'm going to spend some time on this. You may have a lot of resources at your disposal, and it's going to be very important to figure out how to use them, because some of them may have negative consequences like taxes. All right. So the first thing you want to look at is your emergency savings. Hopefully you did a great job while you were working at saving money for specific this type of situation. Normally, financial advisors like myself recommend that you could do, at the very least, if you can do anywhere between 3 to 6 months worth of expenses into an emergency savings account. If you can do up to a year, obviously even better. I always tell people, if you can do $1,000 for emergency purposes, that's great. If, at the very least, do that, right? Obviously, that's not going to carry you too far necessarily in the case of unemployment, being laid off. But what you want to do is make sure that going forward, this might be an eye-opening situation for you, where if you weren't able to have an emergency savings, it's going to make you even more motivated to do that in the future, because now you're experiencing it and going through it. But take a look at your emergency savings and see how much is available, how long can that carry you through. That's going to be probably the easiest place for you to access. That's going to have the least impact to you, because the money is already in an after-tax account, probably in a high-yield savings account or somewhere where you can take the money out without worrying about paying any taxes on that money, right? Another resource you may have is your 401k, right? Now you have to figure out what to do with your 401k. Now, you don't want to make a panic move and have to cash out that 401k out of desperation, because any money that you take out of there is going to be considered taxable income if you've been saving it on a pre-tax basis. So that's probably one of the last places you want to look at because of the consequences of income taxes, right? So hopefully you did a good enough job of saving money in an emergency savings. If you didn't, don't immediately look at your 401k as the next place to take money out of, because that may have pretty heavy consequences in addition to income taxes on the federal and state level. might also be a 10% penalty as well, in addition to that. So that could be a very large tax bill. So you want to think about what are some of the things that you can do. Now, there are some exceptions that you can apply. For example, the IRS gives you the ability every 12-month period to take money out of your 401k tax-free and put the money back within a 60-day period. So can that be an option? That's something to explore. Because, if you get a job within that 2-month period and you had to take money out of your 401k, you might be able to put it back, right? And avoid the taxation, right? So one strategy might be to roll those funds over into a rollover IRA, take money out of the IRA, and then put the money back within 60 days, right? That could be one strategy. Another thing you can look at is if you had any brokerage accounts, right? The stock market is down. Typically, so maybe those funds are down. Ideally, you do not want to sell when the market is down, but you may have to as a result. So figuring out what is best, am I going to sell at a loss? And if so, how does that help me tax-wise later? Typically, you can deduct up to a $3,000 loss every year. So if you had a bigger loss, let's say $12,000, you can carry that $3,000 forward to the next tax year. So that helps you a little bit on the tax side, right? But ideally, you don't want to sell out of your stock portfolio when the market is down. What about stock options? Did your employer offer stock options? Is it a good time to tap into those right now to help carry you through this transitional period, right? That could be another option, but you want to look at the taxation of those as well, because that's going to impact your taxes. Some things that you may not necessarily think of as resources are other opportunities that are out there. For example, if you are a homeowner and you happen to have a line of credit, does it make sense to tap into your home equity to carry you through the transition? Obviously, if you don't have the home equity and you've already been laid off, it might be harder to get approved for one. But if you already had it there and had not accessed it, there is some money there that you can potentially access, right? So you got to look at it from a standpoint of, does it make sense to draw from this and pay some interest versus taking money out of the 401k and paying taxes potentially on that money plus the 10% penalty, right? Weighing your options. Another thing that you may not think of as a resource is a 0% APR balance transfer. This is another thing that I mentioned in the first episode of 2023 is there's a lot of companies out there that are currently offering 0% APR for 18 months. A lot of those times, in addition to being able to do a balance transfer, they give you checks that you can write to yourself and deposit in your bank account. So in your case, if you didn't have a good enough savings and you need to dip into something, it may make sense to do an 18-month 0% APR balance transfer type of deal. Use that money, and then within the 18-month period, hopefully you're already back to work and you can pay that back before the APR kicks in. That could be another strategy, right? Also, another resource you have is time, right? If you are in a situation where you saved enough money, you have enough assets, you are getting a decent or really good severance package, maybe take the time to figure out what your next move career-wise should be. I've seen a lot of people that have been laid off and kind of reinvented themselves, where they said, you know what, I'm going to take this opportunity to go back to school, or I'm going to take this opportunity to start consulting and see how it goes. Maybe it might make sense for me to become an entrepreneur and be self-employed going forward. So don't necessarily rush it. If you have the resources and the opportunity to maybe take some time, that may be the way to go, right? And just kind of take a step back and do some soul searching and see if it makes sense for you to do something else completely, right? Another thing too is the final thing, which is number 6, and it's hiring a financial advisor. And I know that may sound kind of strange to some people, thinking, hey, I just got laid off. Like, I don't think I can work with a financial planner, right? And it's a misconception, because financial planners are resources that you can use to help you navigate through life's decisions. So when I was telling you all these different options, a financial planner can help you weigh in these things with you. Look at your severance package, look at your health insurance options, look at all the resources you have, your savings in your emergency savings, your 401k, your stock options, your regular brokerage account, your IRAs, and help you make decisions and make suggestions. Say, hey, if I was in your shoes, here's what I recommend. right? Based on your situation and taxes and so on, right? So you want to have somebody in your corner that has your best interest at heart, that knows finances and can help you make a decision that is not based on emotion, right? Because you might be in a place where you might be feeling down. You know, a lot of us have our identities tied to what we do. So a layoff, especially if you've been in a company for a long time, might be really painful. And you may not be in the best headspace to make an important financial decision that somebody else, like a financial planner, might be able to help guide you through it, right? So really consider working with a financial advisor, because some of the things I mentioned, you don't need to do on your own. You can have somebody that can help you just navigate through all of that. And you can bounce ideas off of as well and see how they sound to somebody else that knows about money, knows your situation, and cares about you, right? So this is something that you definitely want to consider. So I want to give you a quick recap. Number one is make sure you understand your severance package. Number two is file for unemployment immediately. Number three, make a decision regarding your health insurance, whether it's COBRA, being on your spouse, health insurance, or marketplace special enrollment. Number four is review your expenses. That is very important to see if there are things that you can cut out. Some of the discretionary stuff that you might be able to kind of put on hold, your subscriptions and things like that you may not necessarily need. Number five, examining your resources, and that is your emergency savings, your 401k, IRAs, brokerage accounts, stock options, 0% APR balance transfers, home equities, lines of credit, time, reevaluating, right? Should I open a new business? Should I do something else altogether, go back to school and so on? And finally, hiring a financial advisor for the reasons that I stated, because you want to have somebody in your corner that has your best interest, knows your situation, cares about you, and can help you make decisions that are not based on emotion. So I hope you found this useful. And again, just the same way I started, if you are going through this or somebody that you know, just know that after the darkest night comes dawn, after winter comes spring, this too shall pass. So focus right now on the things that you can control, and then just keep at it. But try to stay positive. If you have any questions, send me an email, luis@onmywaytowealth.com. I'm happy to speak to anybody that may be going through this situation. And I can help in any way I can, whether it's me personally helping them or referring them out to one of my colleagues out of the several financial advisor networks that I belong to. So thank you for tuning in, and I'll see you in the next episode. Thank you for listening to On My Way to Wealth. If you have any questions, please send me an email at luis@onmywaytowealth.com. The information provided here is for information and education purposes only. The opinions expressed herein are solely those of myself, unless otherwise specifically cited. Material presented is believed to be from reliable sources, and no representations are made by my firm or myself about other parties' information or accuracy or completeness. All information or ideas provided should be discussed in detail with a financial advisor, accountant, or legal counsel prior to implementation. Thank you.